So Cordoba is a copper gold developer. We're listed on both the TSXV and the OTC. We have two projects. We have the Perseverance project, which is an earlier stage project. That's in Arizona, and that's a copper exploration project. And our second project, which is our flagship project, is the San Matias project, and that is in Colombia, in the Cordoba region. We have two main shareholders. We are part of the Ivanhoe Group, so that is Robert Friedland, and they have around 63%. And our second strategic shareholder is JCHX. They hold 19.9%. We did just announce our pre-feasibility study results in January of this year on the San Matias project, and I'll go through those in a little bit. Just a little bit of background on this shareholding. It wasn't ever really the intention of Ivanhoe to have such a large shareholding. Initially, the deal that we negotiated in 2015 was for a 35% interest in the public company, but market conditions weren't great. Robert Friedland liked the project and continually backstopped the financing, and did at one stage get up to an 80% interest. So we bought in the Chinese. And we are aware that we need to have a little bit more diversification. We have very little liquidity at the moment, and maybe 10 to 15,000 shares trading per day. Strong management team. Both Mark Gibson, the Chief Operating Officer, and myself have been with the Friedland Group for over a decade. And Charles Forster, the VP of Exploration, was the founding geo at OT in Mongolia in 1994. So this hill that you're looking up at here is effectively going to be the pit. If you turn that upside down, it's going to be open pit. That would be it right there. It's a modest size project, but it is economically viable. It's easy mining. We've not found anything that will prevent us from getting into production, and it's something that we realistically can have in production in about 4 years. So it's 102 million tons. At the moment, we've got probable reserves. It's a 13-year life of mine. It's a low strip ratio, 1 to 1.1, and that the PFS that I was referring to results showed a $415 million after-tax NPV of 8%, 25% IRR, 2.2-year payback. That was using CIBC long-term consensus pricing, which was $360 for copper, $16.50 for gold, and $21 for silver. So in Colombia, you need two permits to build and operate a mine. The first one that I've got here is the PTO, the mining technical work. We had a hard deadline last year of filing that on the 19th of November, which we did, to keep the license in good standing. The level of detailed engineering required for a PTO is about equivalent of the PFS, which is why we actually did the PFS simultaneously. And we are currently now doing the environmental impact assessment study. We're about a year through. We've got about a year to go, and the feasibility study will support that. So if you look over here on this map up to the right, you can see there is Cerro Matoso. That is South 32's mine. It's an open pit nickel mine. It's 20 kilometers from us. So if you're standing on the top of that hill, you can see Cerro Matoso. And also to the north of us, there's an open pit coal mine. So what that means is in that region, people are used to open pit mining. They know what it is. The communities support that. They know the benefits that come along with that. It was one of the reasons we entered into this region when we initially did the due diligence. And in addition to that, thanks to South 32's project there, we have all of the infrastructure. So we've got paved roads until about 20 kilometres. You can see also on the top of the hill, you've got telecommunications towers. We've got the power grid, Cerro Matoso's power grid, and we get about 2.5 meters of rainfall per year. So here's a little bit of the economics that I was talking about. You can see that's $415 million after-tax NPV at $3.60. This is a modest-sized project, so it is price-sensitive. You can see there at $4.32, which was the spot price at the time we announced these results in January. That's an over $700 million project, and we did sensitive test this on the low side as well. This project is still economic if copper goes down to about $2.80. Anything below that, it's not economical. We need an initial capex of about $435 million, sustaining of 88.4, and closure is about 67. And as I said, this project is with a 2.2-year payback period. So I'll just highlight some of the differences between the PEA. In 2019, we published our PEA, and we actually used all 4 deposits in the San Matias project. I'm just going to go back. So you can see here you've got Alacran, Montiel East, Montiel West, and Costa Azul. They were all included in the PEA. In the PFS, we only focused on the Alacran deposit. That was what was required for the Colombian permit, the PTO. And the answer for that, or the reason for that, is simply COVID. We started the PTO and the PFS in December of 2019, and as you're aware, the world was shut down by March of 2020. So in a 2-year period that we had to do these studies, we only had access for 9 months. That meant anything that was not mission critical had to go, and that included those 3 satellite pits. It does mean, however, that I can bring them back in. There's still upside for the project. It can add an extra couple of years onto the life of mine, and it can also improve the economic model. So we can bring those back in at feasibility stage. Throughput, we initially did a staged ramp up starting at 8,000 tonnes per day, increasing to 16,000 tonnes per day by year 6. That was intentionally designed that way to minimise upfront capital. Market conditions weren't really great for something that needed, a project of this size that needed a large upfront capital. Market conditions have changed in our favour. We believe we've got the Chinese in as partners, and so we're starting straight out the gate at 22,000 tonnes per day. Tailings, we were starting off with conventional tailings, but further testing has shown this is a great candidate for commingling of waste rock and thickened tailings, which obviously has a more impact footprint. It's within a smaller area, and it's better for safety as well, especially with the communities around the project. Metallurgy, we were conservative in our assumptions in the PEA, and that was simply because of limited testing. So with further testing, we've been able to have some great recoveries there, from 78 to 90% for copper recovery, and from 77% to 85% with gold, and we'll continue that in the feasibility study. Just the upside on this project. So, given the limited access that we had that 9 months during the 2-year period, we had to push off a lot of the trade-off studies and the drilling that we would normally do in a pre-feasibility study to the feasibility study. So I've got drill rigs mobilizing right now. I'm starting a drilling program with 6 drill rigs. 4 of them are there at the moment, and that's going to be a 40 to 47,000 meter drill program, as well as further trade-off studies, met geotechnical and hydrological. This is the first time ever we've been able to drill under the illegal mining community. So on that first picture where I showed you that hill, at the bottom of there you can see a community which is illegal miners. So this project is unique in the sense that the least amount of drilling that's been done is in the ore body. And so this is the first time we're going to get access to that. So we are expecting to see an increase in the grade of gold, probably not so much in the size of the deposit, but certainly in the grade of gold and the grade of copper. And just another bit of upside here on exploration. So this picture, this gold grade intercept was found in 2017. That was the highest gold grade intercept of the year, 4,400 grams per ton of gold. Fantastic, but unfortunately we haven't been able to repeat it. It has a nugget effect. We continually intercept these high grade gold veins, but we can't trace them along strike, down dip, and so we had to apply a 10 gram per ton cutoff in the PEA, and so for that reason they haven't been included in the PEA or the PFS. But what that does mean is this is a project that's most likely going to produce a lot more gold than we have in the reserve. So streaming and royalty companies are loving that at the moment. I'm just going to go through this really quickly in the interest of time, but we're about to make an announcement imminently within probably the next 2 days, possibly even tomorrow. We do continue looking for the porphyry, which is obviously the greater prize here. We continually intercept porphyry clasps. We unfortunately have not been able to find the source of that porphyry yet. So as I said, results will be coming out within the next couple of days on that. Environmental and social, we are very ESG focused. There are 12 communities within the area of interest. 3 of those need to be relocated, but 2 of those are our legal responsibility. They are communities with legal income type of jobs, I guess. The one that is not the legal community is that illegal mining community right on top of the pit, but we are including them in our process. The other 2 communities don't need to be relocated until year 7, and it's just 20% of those communities. The Alacran community, it's 330 families, approximately 1,200 people. We've got a team on the ground now that specialise in resettlement and relocation. We're very advanced in discussions with them. We will relocate, speaking with the government and working at a round table with them to create a new community. 70% of the people want to work with the company. So we've also got a program going on upskilling them. We've started with the first 70. This is going to create over 2,000 jobs. So there's not enough people of working age within the whole region to actually fulfill these jobs. The impact on this on the Cordoba region will be huge. It's a very poor area, and so hence we've got support from grassroots government, from the municipality all the way through the presidency. And on that note, we also are a project of national interest in Colombia, and we are in the process to have that category increased to a project of strategic national interest, which means it will be handled directly by the president's office. Very quickly on Perseverant. Okay, very quickly, Perseverance is our second project. We just announced results on this. We have 51% currently, and we have an option to get up to 80% in that project. Bottom of the market type deal that we did, over 7.5 years with a $17 million Canadian spend. You can look at our news release for the results that we just announced. We just drilled K22. We're still seeing nearby evidence of a porphyry there, but we will need to run some more of our IP survey technology before we continue on with the drilling program there. And so in the next 12 months, we'll be doing the feasibility study. We've got an announcement coming out again imminently for the kickoff of our feasibility study, the drilling program. We're simultaneously doing the environmental impact assessment study, ready to lodge by the end of, I would say, probably first quarter of next year. We're looking at mine construction towards the end of 2023, early 2024, and into production probably in the beginning of 2026. Thank you very much.